Hey everyone, this is Logan Hertz with Hazeltine LLC, and we are super excited to have one of the big shots in the industry with us today, Mr. Denzel Rodriguez, a totally self-made man. He's got a real infinite banking and velocity banking, and he helps his clients achieve financial freedom by making the most optimal use of their cash flow, paying off debt, and reaching their financial goals. So Denzel, super excited to have you with us today. How are you doing, my friend?
I'm doing well. It is a pleasure to be here. It's an honor to serve your audience today. So I'm happy to dive right into the meat and potatoes and see what value we can bring to the audience today, what they've been looking for, searching for, and provide clarity and a good direction for people to move forward in.
I'm glad you used that word clarity because I'll start with the most obvious question that, quite frankly, most people don't answer very well because it's not the easiest thing in the world to answer. Denzel, what is the infinite banking concept?
What is the infinite banking concept? Wow. So I've got two books that let me just grab it real quick. So we've got books, I would say, is the best place to start to develop
Denzel, come on.
that
People,
answer,
you don't make people
right?
read, do you? Come on.
Have to, man, have to. I'm like, listen, guys, this is what you want to do. So I'll present that in just a second. I'll give my unedited answer of what the infinite banking concept is to me today, after practicing it for roughly 5, 6 years now. The infinite banking concept is an idea that is attached to a physical, no, an intangible product, sorry, called whole life insurance, right? So we have this idea, this concept called infinite banking, and we have a real intangible product called whole life insurance. And it is a particular way of designing this whole life insurance product to solve for a couple of different desires or needs as it relates to the infinite banking concept. And you've got one primary function that allows you to actually implement this concept within this product called whole life insurance. You have something called cash value, where you're allowed to borrow using your own capital, your own cash, right? That gets stored in something called cash value, right? So for the person that's never heard of whole life insurance before, don't even know how it works, you got two components. You got a death benefit and you've got a living benefit, which is the cash value. And the cash value is this tool that allows you to use your capital in two separate locations, right? And you're solving for two things with $1 at the same time, right? Now, once you wrap your head around the idea of being able to use $1 in two locations via leverage, you then get to decide, okay, what do I do with that other move here? So the first move was $1 went into cash value. I have $1 growing in this cash value. And I have this other, say, dollar that I borrowed from the cash value. Maybe a portion of it, not all of it, say a portion of it. And we're gonna go use a portion of your money and go invest it is one option. Second option, you can pay off debt. Third option, you can run an expense. You can self-finance. You are essentially taking over the banking function or imitating the banking function of, say, your average checking or savings account, right? So this is very, very complex. Even I myself, after 5, 6 years, still have somewhat of a difficulty explaining the concept to people. I really have to spend an entire hour with someone to really understand what their current position is, where are you currently at in your finances, how much content have you already watched on the infinite banking concept. And there are, which now leads me to some people that I think explain the concept much better than I can, because I probably butchered it. So you have this gentleman right here, Nelson Nash, who is arguably the originator. This is the origin of where we come up with the term infinite banking, right? So he gets the credit. He wrote the books. He's created the content. He was, the first person on the field, right? And he has led a particular movement that we can now give credit to some other people in the space. We have a gentleman by the name of Caleb. He wrote the book called The And Asset. And I believe this book really, without using too many like illustrations or like examples, just really dives into the philosophy, how we're thinking as it relates to infinite banking. And then we got this gentleman here, Tom Wall, who I got to meet personally, hear him speak. He wrote a book called Permission to Spend, How to Maximize Your Retirement with the Best Kept Secret in Personal Finance, being whole life insurance, the concept being infinite banking, those two coming together to solve for a numerous amount of things, right? And it's something that stays with you your whole life, hence infinite, right? There's an infinite amount of possibilities. There's an infinite amount of ways that we can use this particular strategy, and it's something that is going to be with you your whole entire life, and even after you pass away, it's something that perpetuates and keeps going. Now, I'd love to share from I think this really helps people understand what infinite banking could be at a very high level, if that's okay, right, with you.
Go. Please,
Okay,
please
cool.
do. Please do.
So I'm just going to take it to the whiteboard real quick to just kind of share with people the infinite banking concept on a very, very high scale. And I'm going to use the church as an example. I think most people understand how churches work, right? There's a particular religion, which is the idea. That's the concept, right? What's the product? The actual product, the offer, is eternal life, and then there's this hierarchy, there's this God, right, that exists. So depending on what type of church you walk into, right, you're going to be introduced to either a God, multiple gods, a Trinity type of a God, right, or there's a 3 in 1, so it's one God but in 3 parts. So whichever church you arrive at, boom, that's the idea that's being presented to you. There's an offer, right? So if I had to compare it to IBC, boom, that's the product, right? Whole life in the church, it's eternal life, and there's a God that you serve to acquire that eternal life. But then there's this concept, this way of getting there, right? That's IBC, right? There's a way of getting there, okay? This is idea, the concept. So now, in the economic world, instead of a church, you would have a bank, right? Now, this bank, how does this bank actually generate revenue, or how does this church stay in operation? Well, both of these things need money to operate. And so if I was to compare you, the viewer, the individual watching right now, you have a household, you have an economic, personal household, or what I like to call a kingdom, right? Your domain, right? This is your domain. And you need resources to sustain this domain. Now, on a massive scale, whether it's a church or a bank, you have a multitude of people coming together, a multitude of domains coming together. And what's super cool is all these resources from the different houses, they all use the same location to solve for a particular set of things to help them improve their life, right? One of those things that banks would offer is debt at an interest rate, right? So imagine if you could take over this function alone, being able to self-finance via your own bank, right? So infinite banking, the infinite part, right, is the concepts, the ideas, the perceptives, right, all those different things. The banking part is this, being able to understand, how do banks make money? How do they generate wealth? They receive money from people, right? The bank holds that money, right? The bank doesn't have any of their own money. They receive money from a bunch of different customers, right? And the bank provided them a checking account, a savings account, a money market, a CD, right? Maybe bonds, okay? These are all intangible financial products that pay an interest rate. It allows that household, that domain to generate income, to generate interest, dividends, right? The bank takes your money, goes and invests it, and they give you a portion of that in the form of an interest rate, a dividend, a payout. Well, that's exactly what you would be doing with a whole life insurance contract, is you're replacing the bank, right? You're essentially replacing the bank, acquiring this whole life insurance product. Now, don't get me wrong here. We still need the bank because we still need somewhere to deposit the cash once we do borrow it. So we're not able to just completely cut out the bank, but we're able to not do business with them for everything, right? So instead of going to a bank for a car loan, a mortgage, a personal loan, to help to get a credit card, a student loan, right? And not to say that any of these products are bad, it's just that you now have another option that you get to exercise, right? So you get to replace that function. It may not always make sense, but there's definitely times where borrowing from yourself against yourself at a lower interest rate than what a bank may be offering in a high interest rate environment could save you thousands of dollars, right? So that's one aspect. Then the other aspect is the investing part. Instead of paying the bank different, fees or whatnot to, say, invest or have your money grow in a CD or money market or a bond or different types of stocks and whatnot. Again, before the money enters that bank, you can actually have it enter your whole life insurance contract, where you're provided a death benefit, you're provided that cash value, and that cash value is going to grow, and then you're able to borrow against that cash value while it's growing, as if you never touched it in the first place, and you can go invest that money for a potentially higher rate of return, maybe even your business, right? It's another opportunity there. Then there's real estate, and then the list goes on, because again, it's the infinite part, right? So hopefully that was a much better way of explaining. That's my way of trying to improve how I deliver this to people in such a way that makes sense. And for me, whenever I bring in certain examples, certain paradigms that exist in society today, like when we look at churches, how they operate, this concept of whole life insurance, imagine going to your church for a loan instead of a bank, right? Imagine being able to strategically borrow from friends and family at a very, very low interest rate. And if we look at certain cultures, look at Chinese culture, you look at Jewish culture, you look at the Amish, you look at the Mormons, you look at native tribes that have lots of wealth, that have organizations built, a lot of them will pool money together, right? And they'll self-finance things. They'll build businesses that generate cash flow, and then that cash flow has to get stored somewhere, right? So infinite banking is a location where we can safely, tax-free, guaranteed, grow money, your store of wealth, in a safe tax-free liquid location that provides a guaranteed dividend and comes with benefits after death and while living, which is just, again, very, very unique. So hopefully that was helpful. And if I confuse your audience, comment below, let me know. That's my way of improving. I'm more than happy to be wrong, completely mistaken, so that I can continue to improve. I might as well get it wrong now at 28. So then when I'm 38, I'm not making the same mistakes, right? I'm improving. So
No, I
where do we?
appreciate that. I love whiteboards. I was in the consulting industry for a long period of time, and I lived on whiteboards, which then became PowerPoint presentations explaining abstract concepts in a visual manner so that people can kind of conceptualize. I love that word. They can conceptualize what they're seeing, because it doesn't matter what vehicle you're using. If you don't understand the conceptual strategy you're using it for, you're not going to succeed, whether it's whole life, real estate,
Correct.
whatever, right? Right. You got to have the abstract idea straight. And if you do, then everything else kind of falls in its place, and you can manage all the complexity because you have this overarching unifying idea. And I want to get your thoughts on this, because my experience has been the real gap in people's knowledge is banking. We throw around this word bank, and people, it's one of those words people think they know what it is because they interact with a bank. They have a debit card, they have a bank account. But really, we don't really know what banking is, right? All we know is we deposit our paycheck into a bank account and then we spend from it using a debit card. And so when we start talking about banking, people get really confused and like, no, you're just talking about whole life insurance. To your point, they maybe see the vehicle that we're using, but they don't see the concept, and the gap in their knowledge really is, in my opinion, banking. So you want to, has that been your experience, or has it been different?
I think I've had the upper advantage of not having to fight a uphill battle with potential prospects. And I think that's due to the vast amount of content that I've put out on social media. And so I just haven't experienced the, the amount of blocks in terms of that conversation of banking.
Mm-hmm.
I think the most issues I've had with people is simply the capital and understanding their current domain, their current economic household. How are they being a good steward before having the product, and helping them understand that it's not the strategy, it's not the concept, it's not this financial product that's going to fix your stewardship problem or your mindset problem. So it's interesting that you presented it from like, okay, you're experiencing that people are having difficulty understanding banking. And I would absolutely agree with that. I think there's a lot of my own clients that arguably may or may not be able to define banking to you or explain it that well, but that's not something that's blocking them, so to speak. It's more of a mindset problem overall on money, right? So it's like,
Mm-hmm.
for me, I like to meet people where they're at when they first interact with my YouTube channel, when they become a client. And typically, a multitude of the conversations, we're really not even talking about infinite banking. We're talking about, how do you spend less money than what you make? How do you
Mm-hmm.
become a good financial steward over your finances, regardless of any concept, regardless of any financial product or tool that can enhance your household? How do we just simply spend less than what you make and be a good financial steward? Okay, we solve for that, great. Once someone has good financial stewardship, regardless of any financial products or concepts they have in place, then anything I inject into their household that is going to be an enhancer, such as velocity banking or infinite banking, they're just going to go off to the races. Then it's just a matter of technical, like, how does the policy loan work, and what is the guaranteed, non-guaranteed rate? It's more of technical questions than it is the second part of infinite banking, which is the banking. So I
Yeah.
just haven't experienced that yet, but if I had to work with someone that was just really confused about banking, I would do everything in my power to draw some visuals for them to understand, like, first, how does a bank make money? what is the business model of a bank, right? Like all they literally do is give us a location to store our money before we deploy it. That's it. And whether that money is being stored in a money market, a CD, a checking, a savings, right? That money is just being stored until it's ready to be deployed. And so when you look at a whole life insurance contract, it can essentially solve for that. It can do that. It can essentially work like a checking account, like a savings account. I would say more like a savings account than a checking account, because with a checking account, you want instant access to your money. Whereas with a whole life insurance, you don't have instant access to your money, but you do have access to your money within 2 to 3 business days, usually via a direct deposit, right? So more like a savings account. If you were to just simply say, oh, what if I just simply replaced where I save my money? You will come to the eventual conclusion that a whole life insurance contract is the best location to save, preserve, and park money until it's ready to be deployed. I have not seen a better argument, a better location where I can safely store money tax-free. It comes with a massive death benefit in case anything happens to me. It comes with all these riders, accelerated death benefit riders, terminal illness riders, in case anything happens to me while living, I become terminal. I'm able to access a massive amount of money, completely tax-free, and my heirs completely tax-free on the death benefit. And then I have access to my savings where I can borrow against it at an interest rate that is arguably going to be less than majority of locations in the world where I can borrow. This is going to be one of the places where I'm going to get one of the least borrowing costs. And sometimes people get confused with interest rate versus what the effective net rate actually is, right? That's a whole nother ballgame. So it's like, if you had to decide between a 3% car loan versus a 5% simple interest policy loan, some think, well, the 3 is less than the 5. And it's
Don't get
like,
me started on that one. Yeah,
it's like,
yeah.
well, maybe not. Maybe yes, but maybe not. Yes, 3 is less than 5. Yes. But if we were to make the same exact payment plan back to each other, I could make the argument that I'm actually going to come out ahead with my 5% because I'm not actually paying the full 5% rate on that loan I just took out, because each payment I make is reducing the interest at a faster rate, arguably. Plus, we have to also factor in, well, wait a minute, I'm also earning a crediting rate on the total amount of cash value that was in the policy. So yeah, my loan interest that I paid to the insurance company was 5%, but maybe I earned an internal rate of 2% growth in the total cash value. So now my net actual borrowing cost was, say, 3%. And if I'm making payments back to the loan, not just letting it sit there and grow, obviously, but if I'm making payments back to the car loan, well, now 3% becomes maybe 1.5%, or maybe even less than that, depending on where we're at in the life of that whole life insurance contract. So there's even instances where there's a complete wash. There was no cost to borrow, right? And that can occur too. So that just opens up a whole can of worms there for people to understand that, look, you can do so much with this, and all we're doing in that example, all we did was recapture money that was already gonna leave your economy.
Right.
Can you?
Not to mention control, right?
Correct.
You
Control.
take out a loan from a bank, somebody else is setting the terms. You're putting your credit on the line, right? So, some people, even if they are paying a bit higher interest, they say, yeah, but now I have control. And I would rather have control where no one is dictating the terms of repayment to me. So yeah, I am paying more interest, but maybe it's worth it. But yeah, I agree with you. And there's so much I want to talk about. If you're saying I'm trying to control myself, but one thing that you brought up I thought was really important, which is that It starts with the client. We are not here to sell infinite banking or to sell whole life, right?
Correct.
When we get a client in, it starts with understanding you, Mr. Client. I did this in consulting, and it's like I did a lot of like go to market strategy projects. So, big company wants to enter this new market. They want to know, should we enter this market now, right? And sometimes people just jump right in and say, okay, let's size up the market. Let's look at the competitors, look at key trends, blah, 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 all this stuff. And I'm like, stop, stop. They want to know, should we enter this market? And if so, how, right? So if you really just focus on the question, it starts with the client. The question is not, what is that market like? The question is, what do you already do well, Mr. Client, right? Like, what are you already good at? And then once we understand you a lot better, then we can do a much more focused analysis of the market and see where you can most naturally enter that market. And I think there's a similar thing going on here where it's like infinite banking is great. I love it. Whole life is great. I love it. But
Yeah.
first, I've got to understand you, Mr. Client, and I've got to improve your mindset and your cash flow situation so that you are ready and you're going to be successful with infinite banking, right?
Big time. Yeah, absolutely. I think over 50, 75% of clients I initially interact with that are paying clients that work with me one-to-one, 50, 75 plus percent of the time, they're not ready for the infinite banking concept on the education level wise, like just knowledge wise, they're not ready. Capital wise, just money. Like, this isn't something that I recommend someone that only has $200 in free cash flow or $400 in free cash flow to even really look at this. I think there's other things that we can do with that $200, $300, $400 to get that cash flow higher to, say, in the neighborhood of $1,000 to $1,500 or more. And we're talking cash flow, money left over after everything has been paid, debt, expenses, tithing, giving, everything. So if I have a net cash flow of, say, $1,000 to $1,500 or more per month, for me, that's an initial pre-qualification that we could now explore this concept, right? This strategy. And then before that, with that $1,000 to $1,500 or more in cash flow, I'm saying, okay, of that free cash flow, how much are we going to start to pay ourselves in the form of savings? How much are we going to save per month? If they say, okay, out of $1,500 in cash flow, I would like to save 50% of that, right? So $750. Okay, great. $750 times 12, whatever that number is, that is the number that we're going to save every single year, every single month, and obviously with the intent of increasing that number over time. So once I have a client that has displayed a consistency of saving a certain dollar amount, and then they have the amount of capital saved up for a year, right? Then I say, okay, we can now relocate that 10 grand, 12 grand, 15 grand, however much. We can relocate that savings that was sitting in your savings account earning less than 1%, maybe 2, 3 in this environment, and we're going to move it over into a whole life insurance contract. And all we're comparing is the performance of your savings dollars. What we're not going to do is compare your whole life insurance contract to your investment dollars, right? Because that would be an unfair comparison. In fact, I would argue that a whole life insurance never has to be compared to an investment, because that's not the purpose. I don't want my client to reduce how much they're investing to then allocate it over to the life insurance. I'm saying it's two separate things. You pay yourself first. That's like a principle. Call that savings.
Right.
All I'm doing is changing where you saved in a whole life insurance contract, and it comes with additional protection. Death benefit, tax-free growth, guarantees, liquidity, so many other, there's like 7 other benefits other than just the rate of return in the life insurance contract that outweighs the rate of return in the
Right. And
policy
everyone's
itself.
focused on rate of return. That's what they're all focused on. I mean, that is not unimportant. I mean, okay, that's a
Correct.
metric that fine. But when you're focused on that, it's hard to see the value in any of these phenomenal vehicles when you're just myopically focused on return on investment, you know.
Exactly.
And I would argue the return on investment a whole life when you consider that it's tax free is pretty and with no market risk is still very competitive. Um,
Very, very. I've done some case studies where I illustrated the average rate of return of a high yield savings account over
mhm,
the last 5, 6 years compared to a whole life insurance contract. And I'm saying, look, the high yield savings beats the whole life insurance contract the first couple of years. We
right.
go out 10 years and longer. Oh my goodness, this thing takes off compared to a high yield savings. And here's the thing, there's going to be years where that high yield savings is only doing 1.5%, 2%. And there's going to be years where maybe it's doing 4.5, like what we've seen in the last year or two.
Mhm,
And there's going to be environments where you're earning less than 1%. So you're just going to have all this fluctuation here. And they say, guess what? Every dollar that gets earned, you're paying at least 22% or more in taxes
yep.
on that gain on the interest.
Yep.
Whereas over here, every growth is 100% my dollar. That is a huge outperformer. So I show the case study, lay out the numbers. So look, this whole life insurance contract is going, when properly designed, is going to outperform a high yield savings. It's going to outperform a CD. It's going to outperform a money market. It's going to outperform your checking account if it has like an interest dividend rate on there. And it's going to outperform a bond, right? Over a
Mhm.
long period of time. So those are the only things we really should be like comparing
Mhm.
performance of a whole life insurance contract to,
Right,
right?
right. And if you're gonna compare it to an investment, which I wouldn't, but if you're going to, then you can't you've got to make adjustments for risk and for volatility and for taxes and all that. And after you make all those adjustments, so you truly get more of an apples to apples comparison, I would say it's still pretty competitive. No, it's not an investment. And no, I wouldn't compare it to investments. But that's always an unfair comparison because what they're getting on their investments is always just based on an assumption, a projection of what may or may not happen in the future. Nobody knows what the market's going to do, right? Whereas with whole life, we have guarantees. So we can project out on with much more certainty, you know, what we're going to get. And man, there's so much more we could dive into there. But I do want to make sure we get to, we're talking about infinite banking, we're talking about whole life. Let's talk about a very complementary strategy, which is velocity banking, something that you're arguably more well known for than infinite banking. And I love how these two can work together. But tell us, what is velocity banking?
Yeah, so velocity banking is really cool because it's almost like what I've viewed it over the years now, velocity banking is like a pre-qualifier for the infinite banking concept. So in a nutshell, velocity banking is actually using and leveraging banking products such as credit cards, personal lines of credits, business lines of credits, home equity line of credits in the first and second position. Those are your banking products that banks provide. So I'm teaching my clients how to actually leverage the banks that offer products and use them more efficiently than how they're being sold. So most people have no idea how to use their HELOCs in the 21st century today because of how they're sold, right? Most people have a mortgage. They pay down their mortgage by making extra payments or making the regular payment. And after so many years, equity is built up because the property also appreciates even as you're paying down the debt balance. So equity, boom, appreciates. Now, what banks do to make even more profit on you is they say, hey, do you need some money to repair or remodel your roof, your bathroom, your kitchen, the patio, the garage, the driveway, the this, the that, the other thing? And what the banks will do is they'll charge a much higher interest rate, typically, than what your mortgage loan rate is, right? But the way they reel you in is they say, here is an intro rate, zero closing costs, right? So a very cheap way of accessing your money. Instead of going to a loan company where they charge you origination fees and arguably a higher interest rate than your HELOC, you can borrow against your property's equity, maybe even have the interest be tax deductible, maybe, right? These are all the selling points. We'll give you an intro rate for the next 12 months of 4.99% or 3.99%. And so people take that HELOC, they strip out all the equity in there, they max out the line, and they start the work. Now, during that period, they only have to make interest-only payments. So the payment's really, really low, right, Logan? The payment's super low. They can do what they need to do. They're still cash flowing and making their payments. All of a sudden, a year goes by, and now that payment went from $200 a month to $700 a month, right, or $600, and they're like, oh my goodness, what am I doing? What happened? This HELOC is horrible. It ruined my finances. Hence, you hear all the articles on the internet and all this stuff going on. So where Velocity Banking comes, it says, hey, wait a minute, guys. Instead of using this HELOC the way the banks want you to use it, what if we leverage the equity in our home to accelerate that car loan, that high interest car loan that you have, those high interest credit cards that you have, that student loan that you have that's at a high interest rate right now that just got kicked back in, and you're paying 6-7.5% interest on a 20-year student loan that you don't even understand how it works when you make the payments. It's always weird how it gets applied. And we could leverage the equity at a simple interest rate, and we can actually manipulate that interest, meaning we pay less than what the bank actually tells us, right? And here's what's even cooler. Because that product is at a bank that has a checking account, we can actually fully 100%, we can replace your checking account with your HELOC, your PLOC, or your BLOC, or maybe even some cases a credit card. We can fully replace the checking account, right? And have all your income get deposited into that home equity line of credit. So when you take out that lump sum of money to go and remodel your home or accelerate debt or make an investment, whatever it is, we can reduce the interest costs of borrowing. We can offset your interest costs of borrowing by simply parking our paychecks. Some people call it paycheck parking. You literally park your paycheck, deposit it right into the HELOC. It satisfies the payment of the HELOC in advance, so it's not going to show that you owe anything. So it satisfies the payment in advance, and it starts to reduce the daily interest costs on that HELOC, right? Now, does this work 100% of the time? Absolutely not. When we run the numbers properly, when we run the math, if we just simply were to use the product more efficiently, instead of taking a lump sum of money out like you would a loan, because that's how people relate it to, they think this is a loan. It's a line, and it's revolving, meaning you can put money in and you can take the money right back out. So let's say you wanted to redo the bathroom because that's what wife wanted for Valentine's Day coming up this year, right? You want to redo the bathroom, you want to make it amazing, and it's going to cost 15 grand, and so you got a HELOC at a very, very low intro rate. Great. So your cost of borrowing is already super low. And you take that 15K out, and you're now doing the work on the bathroom. You're going to remodel the bathroom. Great. Instead of just making interest payments back to the HELOC, or a regular monthly payment, interest plus principal, back to the HELOC, instead of just doing that, what if you sent 100% of your paycheck to the HELOC? Well, your next question is going to be, well, Denzel, how do I pay all my other bills? And I'm going to say, hey, Logan, this is not a loan where you take money out and you can't re-access the funds again. This is a line that when you dump your paycheck in of 5 grand, 7 grand a month, whatever it is, 100% of your money went to principal. So 15K minus 5K from your paycheck, you now owe 10 on the HELOC. It 100% went to principal that same day, instantaneously. And your next question is, well, how do I pay my bills? Well, guess what? Your HELOC is at the same bank that your checking account is at. So you can make a withdrawal of $2,000 to pay your mortgage payment, to pay the light bill, to pay the electric bill, right? And you can slowly withdraw money when you need it to pay bills, and then your cash flow of $2,000, $1,500, $1,000, guess where it stood? It stood in the line of credit 100% as principal. And no payment is gonna show up, right? Because it already got satisfied. If it's an interest-only HELOC, on the due date, they're gonna pull interest from the available equity in the line of credit itself. So you technically aren't like having to have money over here to make the payment. It already got satisfied, and they're just pulling it. They're pulling interest from the available equity, which was your money that was already sitting in there, and it's reducing your interest costs. And hey, Logan, boom, now the bathroom's done, and within 4 to 6 months, your $15,000 could be fully paid off, right? Or within 6 to 9 months, fully paid off. And now you can re-access the money again to, guess what? Christmas is coming up, or her birthday's coming up. She said, now that you did the bathroom, I want a new kitchen, right? We live to please our wives, yes? We make them happy, and we uplift them, and we try to do what's right with God, and we make our women extremely happy because it's going to make our lives happy. So now you're going to do the kitchen, right? And so it's just a much more efficient way of borrowing, of accessing capital when you use this concept. And that's just one use. You can use the velocity banking concept to invest. You can use the velocity banking concept to accelerate other high interest debt, high payments, right? And flow that through the HELOC instead, and re-access that cash flow if need be. So a majority of my audience and people that find me are finding me for that concept, velocity banking. So they start to do that on their own, or they hire me and I work with them. And let me tell you, there's so much synergy with velocity and infinite banking that it's such a helpful, as I said, like a pre-qualifier, because once I introduce infinite banking to them, they're like, their minds blow, because they're like, oh, so I don't have to, you're saying, Denzel, that I can essentially build my own customized line of credit that's tax-free, has a guaranteed growth rate. I don't have to go to the bank and apply for an increase. Like, it's just naturally going to increase year over year. And I'm like, yes. And you're going to be able to leverage this like you would a line of credit. It's not as flexible like our lines of credit at the banks are, but very, very close, right? And the borrowing costs, you're able to offset it even easier than you would with velocity banking. So it's like a graduation process, right? And before velocity, I have something called velocity banking pregame work, where I'm like, hey, there's pregame work before we even get into that. So it's, again, it's a mindset, meeting them where they're at, working with them, baby steps, just with no products, no concepts. How do we spend less than what we make? How do we pay ourselves first by saving money, being a better steward? And then we throw an enhancer in there, a strategy. Maybe it's debt snowball, maybe it's debt avalanche, maybe it's cash flow index, maybe it's velocity banking, maybe it's infinite banking. These are all strategies that enhance an already fortified household, but a household that's not fortified and it's hoping that velocity will fortify them, they'll be ruined, right? They'll make a mistake. They'll in the church, they call it backsliding, right? You're going to backslide into what you were doing before, the sins of what you were doing before, rather than removing that at its core, and adding something that is, essentially pure in our financial stewardship model for success, right?
Right. I can give you, I think it was Nelson Nash who said, I can give you the best tool in the world, but if you don't know how to use it properly, or you're not willing to use it properly, not only is it going to do you no good, you're probably going to break it,
Yep.
So yeah, velocity banking and infinite banking are for people who have some level of financial discipline and financial responsibility. Because
Correct.
I definitely talk to people where they're like, yeah, my wife, if we have a HELOC, it's not going to be good. And I'm like, okay, then maybe it isn't for you until you can learn to, use it with some discipline and not be tempted to just pull that money and run, and spend it on stupid stuff. And man, I could talk all day, but I do want to also talk about Denzel Rodriguez because I know your story is pretty cool. And I know the business that you and I are in, let's just say, is not the easiest business to be in. So I want to hear about, why do you do what you do? And how did you get here?
So my journey starts 2014. I graduate high school, right, out of South Florida area. And in the summer of 2014, I got recruited into a company called Vector Marketing. Most people know it as Cutco, where they sell high-end kitchen cutlery knives. And it was at this particular spot location in my life where I was introduced to these ideas, these concepts that we call in the sales world, in our industry, we call it follow up, referrals, leads, prospecting, communication, speaking. Like, I've never heard these words spoken when I was in high school, when I was working at a pizzeria, in my own household. These are not words that were used daily. But I now enter into this environment where I'm being taught how to sell something, how to communicate value of a thing, like just selling this piece of cloth. Like, I could sell this piece of cloth today. Like, just being taught that skill right there is incredible. So here I am showing people how they can use this product. It's going to enhance their life. It's going to make cooking easier, faster, more efficient. You can cut through anything with these knives. They're going to last forever. It's a lifetime warranty. We sharpen your knives. We take care of you, provide the service. And on top of this all, Logan, guess what? If you help me by purchasing this set of knives for your household, that your wife's going to be ecstatic. She's going to be blown away. She's going to, the way the knives feel. So not only are you going to be happy, wife's going to be happy. And guess what? You're going to help me start my own business in the next year. From the commission that I make from this sale, you're going to help me go to college. You're going to help me get a degree in this, or you're going to help me build my business, start up. I'm just letting you know, Logan, I have a desire to help people manage their money, pay off debt, create financial freedom. And this capital that I'm making right now is being saved for that. So that's how my journey started. Was like, I was literally in front, face to face, pre-COVID, right? Face to face, going to people's homes at all hours of the day, right? Early in the morning, late at night, in the afternoon, showing up to people's homes, doing knife presentations. I'm like, give me your frozen meat, right? And I would take the chef's knife, the cleaver, and I'd go just like this. And I said, look, I'm gonna, in one, boom, not even gonna use full force. In one shot, I'm gonna split your frozen piece of chicken, right? That's it. And we would do it, and they would be like, what? Like, this is crazy. So they would have a blast. So 2014, 2015, I do that. I take the next 4 years, 2014 to 2018, and I attend at least 100 in-person networking events, seminars, masterminds, workshops, business conferences, you name it, religious ones, non-religious ones, everything. Networking mixers. I'm going to restaurants, bar/restaurants. I'm going to rooftops. I'm going to hotels, you name it. I'm even traveling, going to different states, you name it. 2014 to 2018, that's what I was doing with my extra money, because I was trying to discover my purpose, know what I wanted to do. I knew I didn't want to sell knives my whole life or work in the food and beverage industry, but that was my skill. Those were skills I just knew how to do, and I had education. I was using that to fund my dream, right? I didn't know what my dream was till about 2017, 2018 is when I actually came across the velocity banking concept, which was 2017. 2018, I discovered infinite banking. By June of 2018, I get fired at my primary place of work, right? On a Monday, I get fired. That same week, on Friday, I had my first speaking engagement, and I was going to talk about velocity banking and infinite banking. I did a whole presentation. That video, you'd have to scroll all the way to the bottom. It's one of my very, very first videos. It's over an hour long, and it's like something like money mastery, something like that. And it's me just in front of a big whiteboard with a screen, and I'm presenting to about 9 people in a room down in Miami on infinite banking. Mind you, I didn't even have a policy myself at this point in time. Actually, I'm a liar. I may have just got my policy, but like I haven't, really been using it. So I'm not necessarily a product of the product yet.
Mhm.
I could barely even afford my own policy, right? Because I had just got fired, but I had some savings. And I had a line of credit, and I was doing velocity banking to kind of buy time. 2018, around August, is when I start the YouTube channel, right? When I started the YouTube channel, it's like I immediately knew this is what I want to do. Not because of what some guru said. It was confirmation, Holy Spirit, but it was also confirmation from very, very close friends and family that believed in me, that said, hey, you got a good voice, you can do video. And then shout out to my friend Alex Albaran that really put it into a strategy and was like, YouTube, video, screen, face, whiteboard, do your illustrations, start doing case studies. It was kind of like, formulating a whole strategy, and I ran with it, Logan. I totally ran with it. I was ecstatic. My first video got like 28 views. I'm like, this is gonna be so successful. Mind you, I didn't know what a subscriber was. I didn't understand views, analytics.
Nobody does. Nobody does.
Yeah, I just figured 28 views meant 28 people watched my video, right? And I imagined talking to 28 people in a room. I just imagined it, and I was like, that's a lot of people. Can you imagine if I got 50 views? So mind you, I post the next video the next day, and then that got 50 views. The next video gets like 60, 70 views, and it keeps going. It goes from hundreds of views to thousands of views to tens of thousands of views to now hundreds of thousands and now millions of views. It's now 2024 as we're recording this video in February. So from 2018 to 2024, that's where I was able to really hone in on my skills on personal finance, life insurance, velocity banking, these concepts, the mindset, the strategy. And I decided to present case studies via a whiteboard, something simple. A lot of people don't understand Excel calculations, so I basically would take the calculations on Excel and just put them on the whiteboard for people to see, right? And then those that are tech savvy or like engineers and whatnot that like the Excel, then we would basically do that off camera. But my style has always been the whiteboard. I would do visual illustrations just like this, or I would do number illustrations and just kind of map out case studies and just document people's financial journey. And a lot of people clicked with it, and I've just kept that same rhythm, stayed consistent, and I've been able to create a wonderful life where I'm on the path to financial freedom. I have financial independence. I've been able to do a lot of things with my policies, with velocity banking, acquiring a property, doing all these wonderful things. So that's a little bit about my origin story, how I discovered these concepts, how long it took me to really master it. I feel like today I can honestly say I'm a master in velocity banking. I'm a practitioner in infinite banking, meaning I practice it, I do it. I wouldn't say I'm the number one person to talk to on infinite banking. I do believe I bring good ideas and good value to the space, to the industry. And my goal is just to really bring the most amount of integrity and ethics as it relates to this concept, because it can be misleading. It can be attractive to just try to get everybody on it because of how awesome the product is. But the reality is it isn't for everyone. I've had 2 cases so far where people canceled their policies, right? And that was because on my part, not doing enough, not asking enough questions in advance. But then also there's the unexpected things of life, you know, like right now I'm going through a case where I have a long-term client, been funding their policy for multiple years, and they've been borrowing from it, not really the right way. And it got to the point where they're now in a financial crisis. So that was unexpected. But we were able to help them on the mindset, on velocity banking, had a ton of success. We paid off a lot of debt, but their ability to be more productive and create more income and just wasn't there. It didn't build in that time frame of funding a policy. And so when we're improperly leveraging and borrowing too much and not paying back the loans, the interest starts to compound. Then there's premiums that are due, and now we're at a point where he's unable to make the premium payments, and so the policy's at risk of lapsing. And that was, you know, due to my part. So I take full responsibility, where, you know, this is a client that started following me back in 2018, 2019. So I was still very, very green, very fresh, and just eager to serve and help, but also eager to generate income and really experience the product, make people happy, but not expecting, not foreseeing other things to happen in life that could mess this up. So with that, those two case studies has moving forward for the last few years, I've been way more diligent in asking so many questions in that process of putting a infinite banking policy in place, where I'm like, now I'm asking questions like, not only are you able to self-fund for the first year, but do we have a pathway of funding this for the next 3 to 5 years, right? If you lose your job, can we still fund this? Can we still pay in the minimum to keep it alive? Can we, you know? So I run through that, and I'm like, if there's a no somewhere, then I want to plug that. I want to, you know, replace that with a yes, so that we don't run into a potential issue later on. Now, we can't prevent all risk, right? There's definitely unforeseen things that can occur, but if we can eliminate a majority, then that obviously decreases the amount of policies lapsing and people misusing this product. There's no secret that people have absolutely been hurt by this concept, infinite banking, as well as velocity banking. So I was on another podcast, I think I was talking with Caleb or someone else, where I was basically saying, you know, for the last year or two, really after COVID, I've been running a financial clinic. Like, majority of my clients that come to me are already in a crisis, about to enter one, are coming out of one, are trying to rebuild. So I'm just running a clinic here of trying to help people heal from their trauma, fix, you know, repair the mindset, improve their stewardship before implementing concepts, right? And just let's get that foundation right. Let's remove all these different barriers and all these different distractions, so that this strategy, infinite banking or velocity banking, again, can be an enhancer, not the anchor that we rely on. We don't want that. We want it to be an enhancer, an added feature and benefit to your foundation to improve it.
Exactly. It adds rocket fuel to whatever you're already doing. But if
Exactly.
you're not already doing, you know, if you don't already have positive cash flow, if you're not already financially responsible, it's not going to fix those problems, right? And we're running out of time, because I could talk to you forever, man. I could just, I just listen to you forever. But I do want to go to one thing. This is a little bit selfish. I don't know how much my audience cares about this, but I care about this. Tell me about those early years when you were starting off in business, because we've all been there, and you know nothing, and it's brutal, and you find out how hard it is, and you get rejected all the time, and people call you names because they think you're a scam artist, or they just don't understand, you know. How was it? How did you get through those early years of just building a business from scratch?
All right, so let's go back to 2018, August. That's when I, you know, started putting out content. I had to make a decision, go all in on YouTube, creating content, serving an audience, or go drive Uber and try to get another job in the food and beverage industry. And I was doing both. I was actively looking for work and simultaneously trying to build this YouTube channel. My commitment was I'm gonna put out a video every single day, right? And I'm gonna give myself a time frame. I think a lot of people's, unfortunately, a lot of us can get stuck in the clouds. And I like to have the whole cloud thinking really big, bold, brave, courageous. I like that. And I also inject a dose of reality, okay? It's not one or the other, I like both, okay? My dose of reality was, Denzel, you have 6 months of cash to survive, right? I was leveraging my personal line of credit at the time. Right after getting fired, I got an increase to 10 grand. My expenses per month were roughly 1,500. My income was 2,000. I said, okay, it's August. From August, so August, September, October, November, December, January, right? 6 months. We got 6 months to generate at least $2,000 a month from YouTube. If we can do this, then that buys us another 6 months to move forward and really build this out. So that was my dose of reality. So I like to tell people, look, whatever new thing we want to get into, we have our safe route in life, which is go get a job, spend less than what you make. You're going to have positive cash flow. Go get a job, go work really hard, produce, be effective, right? Spend less than what you make, avoid debt as much as you can, and you're going to have positive cash flow and you'll be able to live your life. Okay, great. Now you discover your dream, your purpose, and you're like, okay, this is going to take risks to go reach that. Okay, great. How much capital can we save up, can we build to give you the time to do that? So there's the learning curve, the education, and then just the time factor that you need to put into to be great at anything. You're going to need to put at least 10,000 hours in. So another dose of reality is a measurement, 10,000 hours. If you're not willing to put 10,000 hours into that thing you want to become great at, don't do it. It ain't worth it. You're going to be mediocre. You're going to be just like everybody else. You're going to get average results. You may not be fulfilled. So you need to be maniacal about it. You need to be obsessed, willing to put 10,000 hours. So it's another reality measurement stick. We got 6 months. We got 10,000 hours. Denzel, if this doesn't work, you're going to go get a job and you're going to build that YouTube channel part-time, right? So in my case, that's what happened. From August to January, I know the first month I made $400, okay? So I'm in debt. I'm running a negative cash flow, but I have leverage, enough money to buy me roughly 6 months. That means
Most
going
people at
into
zero.
more, yeah, I mean, going into more debt. So I didn't even start at zero. I started at negative, right? I lost a job. I was already in debt, multiple thousands of dollars, and I had that line of credit to buy time. So the first month I make like $400. The second month I do like $636 or like $640, something like that. The third month was like a little over $1,000. The fifth month was like $3,300. I was like, okay, so I just made more money than what I was making at my job by month 5, right? Month 4 or 5.
That's really impressive. That is really hard to do. That's really impressive.
And then, if I'm not mistaken, I think I had a $6,000 month that preceded the 3K. If I'm not mistaken, it's been a while now. If that's not true, by January, I had my first 10K month. So January of 2019, I made $10,000. And it was at that moment, that was the most amount of money I ever seen in my bank account. I was like, okay, there's a comma, right? But there's a zero in front of the comma, not a single digit and then a comma. There's a whole comma, right? And that comma stayed there, because usually when you get a paycheck, that comma, boom, and then like bills come out, you don't have the comma no more. So that comma stayed there. I was like, wow, and there's a zero in front of it. This is pretty cool. So And it was also my birthday month. So I'm like, what a, reward, right? But before I celebrated, I took that money, I started to, pay down debt, pay bills, and then I was at that moment, I said, okay, we've proven that we can make more money than what we were making at our previous job. We're making more money than we have ever made before. Great. Let's go another month. Let's test this out. Another 6 more months. February, I made over $12,000. Right? So I was like, okay, this money, it's growing. It's just the numbers is going up. February or March, I paid off all my debt. Right? So boom, I become debt free. I relieve myself of all those obligations and bring my line of credit to zero. March or April, I think I did like $25,000 or something like that. And I'm like, this is the confirmation. I'm all in, and I'm trusting in my faith in the Lord, and I'm going to move forward, and I'm going to keep serving who I want to serve, and I'm going to stay focused on the things that I do know that I can master in, because we all know so little in life. And it's true, there's a lot that we don't know. So it's always going to be that you don't know a lot of things. That percentage is always going to be vast of the don't know, and I don't even know that I didn't even know that, right? That's always going to be there. It's always going to be more than what you know. What you know in life is about this much, right? We take it to the whiteboard here. This is how much you know. I don't even think you can see that dot.
Yeah,
Right?
not visible.
Right? There's a dot like right there. That's how much you know. And then this
Right,
is how much you don't know.
right,
Right?
right,
This is how much you know that you don't know. Like
right, right,
you don't know how to go to space, and you don't know how to calculate, pre-cal, and so there's things that you don't know. You don't know how to change an engine, I don't know how to do this, don't know how to do that. That's how much you don't know. And then you know about that much, right? I'll give you that much. You can't even see it on the whiteboard. So
Now,
that
now, Denzel, show how much people think they know.
oh, right, yeah. People think they know like half. You know what I mean? But the reality is, this is how much we don't know that we don't even know. Like, it's crazy.
Right,
So I decided to focus on that little dot. And I said, okay, Logan, I know about this concept more than majority of people. And if I can help them achieve their first 3 action steps, 5 action steps, then maybe they will pay me some money to do that for them and help them along the way. I believe that I am a better financial steward than most people are. And the reality is, we're living in a time where it's amateur hour anyways. Most people are amateurs when it comes to their finances anyway, so you automatically look like an expert. And all it is spending less than what you make, right? It's all about what you keep, not how much you earn. And it's like these things we get told to us over and over and over and over again, but for some reason it doesn't click until there's a personal connection with someone, and someone that's willing to be coached. So I said, wait a minute. If it was so easy to get out of debt, if it was just, hey, make extra payments on your debt and you'll be debt free in this amount of time. Dude, if it was that easy, everybody would be debt free today. But that is not the case. It is not as easy as just making extra payments. There are steps. Unfortunately, it sounds easy to me. It totally sounds easy. But that's my gift. That's my spiritual gift. So now I take that gift and I go serve others. And that person says, I'm willing to pay for that. I'm willing to exchange my hard-working dollars to have you in my life, Logan, to show me how to do this, right? And walk me through the process. And it almost doesn't matter what the strategy is at that point. This is another thing, another like paradigm shift I've discovered. I was like, wait a minute. It's not velocity banking that's helping them get out of debt faster. It's not infinite banking that's creating financial freedom for them. It's not that snowball debt avalanche. It's really their ability to be coached, to receive mentorship. So I now make the argument today in this very video that it's coaching, consulting, mentorship that is really what's helping people get out of debt and create financial freedom. And again, the strategies, the concepts, the ideas are enhancers, but it's really that intimate connection with someone through the camera, through the phone, interaction, saying, hey, I'm with you, I support you, I back you up, I'm here. This is where you get to share your feelings, your emotions, your trauma, and we overcome that together, right? And that alone, my friend, I've seen people do amazing things in their finances because now they believe in themselves again, right? Before I was, I'll use you as an example. It's like when I jump on a call with you, Logan, and you're like, Denzel, my finances are a mess. So right now I'm talking to Logan the fearful, Logan the vulnerable, Logan the unbrave, the not courage, right? He's a mess. And then halfway into the call, I get little glimpses of Logan the brave and Logan the courageous and Logan the fearless. When he said, this is my dream. I dream to provide this for my wife and this for my kids and do this. And so then I like literally, I try to snatch that and then reiterate it to them. I said, did you hear what you just said, Logan? You want to do this with your life? Okay, 2 minutes ago, we couldn't see the light at the end of the tunnel. Now you're dreaming. Logan, when's the last time someone asked you to dream? I had a wonderful conversation with a lady, a client of mine, broke down in tears because I asked her this question. I said, when's the last time someone asked you to dream? And she was like, when I was a kid. It's a 50-plus-year-old woman. So we're talking 40 years of labor, hard work, giving your all to others except yourself. This woman is empty. And in that 20-minute conversation, the kid in her was so courageous to dream again. She said, I want a big home. I want to cook for people and I want to make people smile. So I said, boom, boom, boom. I took that, wrote it down. I said, you said this, not me, you said it. This is Logan the brave, Logan the courageous, Logan the fearless, right? Boom, boom, boom. And it's like that alone. Now, anything else I inject, strategy, concept, they're going to be able to receive it now and now go take action and do the thing rather than me try to teach them a strategy and say, okay, I got it. And then, 3 months later, they're worse off. And I'm like, wait, what the heck's going on? What happened?
Yep.
All right.
All they would need then would be just a textbook. Here it is. Go do it. Right. But
Go do
no,
it.
they need a human being. They need a coach. They need that support. They need, a coach. Right.
Granted,
What you do, it's like being a good fitness coach. Right. There is a
exactly.
method, there's a methodology, and you're going to help, but there's a huge psychological component to it as well. Absolutely.
Granted, there's some people that can DIY things for sure, right?
Yeah.
And boom, you have a gift. Like you comprehend things faster. Wonderful. Go serve people, right? If you DIY'd it, there's so many people on my channel that DIY'd everything I teach, and they're making more money, debt-free. They're commenting. I'm like, I've never spoken to that person. They never paid me $1, and they've been able to pay off all their debt. I'm like, you have a gift, right? The gift of interpretation, comprehension. You need to go serve your neighborhood now. Like, go help people because they're struggling out there, right?
Yeah, yeah. Man, well, this has been great, Denzel. There's so so many things we could talk about. I could keep talking to you forever, but we do have to unfortunately, bring this interview to an end at some point. So, what thoughts do you want to leave our audience with just in closing?
Action steps is for those that have never had a financial coach, consultant, a mindset coach, a business coach. I would highly consider adding that into your financial strategy, having someone that you can talk to, bounce ideas off, not a friend, not a spouse. You can share those ideas, but someone that you can pay some money or be a part of a community, join a financial group, a Facebook group where there's community, there's hot seat coaching, something to that nature would be the action step that I would give everyone that has watched this channel. And if you'd like to go see my work, do your due diligence, you want to Google me and make sure I'm legit, I would go over to my YouTube channel where I have case studies. I map out my personal financial journey as well as my clients without naming names, right? And I lay out all the numbers. And that's a great way to get to know me, how I operate, if you're interested in having a conversation with me one-to-one. So I leave you with that. And God bless your audience. Thank you for your time. I appreciate it. I know this will bring tremendous value to that mother out there that's watching, to that dad that's like, I'm ready to rebuild. I just went through a divorce. The mom that just lost a husband, the widow, the single mom with 4 kids. Like, those are the people I'm after, right? My passion is working with moms, right? And my first client was my mom. And that's been my motivation. Every time I speak to another mom on the phone, I replace that mom with my mom, and I, educate her on what I would have her do, right? So I'm always leading with that. My goal is to bring the most amount of integrity, ethics, and character into every case study that I introduce and illustrate and help guide people to the end game, which is either kingdom, their faith purpose, or if it's just financial freedom, financial independence, financial security, that sort of thing.
Excellent. Denzel, thank you so much for your time. God bless and Godspeed.